Hello and welcome. It's time to take a look at what could drive the markets this week. I'm Kelly O'Byrne and I work on the dealing desk here at LCG, and I'm joined by our senior market analyst, Jasper Lawler. Jasper, now the Fed raised rates last week. We saw a lot of flow on the desk, even though it was expected, and the dollar made some big moves.
Yeah, I know, I can imagine it was pretty busy because what was interesting was that the lead up to it was that we had a couple of weak economic data points, and so the dollar sold off quite aggressively in the afternoon pre-Fed, which you know, and because it was feeding into that general idea that you know, maybe this is just this rate hike was a done deal, but maybe this will just be the last one this year. Because the data doesn't support more. But actually the Fed were pretty confident about the US economy. They brushed aside the fact that inflation's probably going to stay below their 2% target this year. And so the market reaction was actually just buy up the dollar again. And now we're seeing the likes of gold, even the euro, the pound to some extent, selling off against the dollar because, well, if the Fed's going to look through the softer inflation, unemployment still looking good. You know, they basically seem like they're on track to maybe go again in September, and they still seem confident enough in the economy to go ahead with shrinking the balance sheet. So that's all quite hawkish.
And something confusing for some at the moment is the Fed tightening, but stocks keep heading higher.
Yeah.
What's your take on that?
Well, that's the thing. Yes, I mean, generally speaking, higher interest rates, not so good for stocks. You know, you tend to want to shift into bond markets or, you know, just keep your money in the bank account, obviously, rather than having to invest to get the yield in stock markets. But typically the way these things work anyway is that actually stock markets don't sell off right at the beginning of the tightening cycle. It's some way into the tightening cycle. In a typical environment, that would be up around 4 or 5% in interest rates. Obviously, interest rates were so low for such a long time, I would imagine it's not going to get that high this time before the market reacts. But nonetheless, we're probably not there yet. And I would say that on the kind of on this global stock markets all move together. So we saw the Dow Jones hit, you know, the US 30 as we trade it, hit a record high last week, but also the DAX as well. So I think it's a global bull market, and probably the emphasis has actually shifted a little bit away from the Fed because they haven't done QE for so long to the ECB, who are still doing QE. So the big shocker for the market, which I think could disrupt this bull market, maybe even this summer, would be when the ECB finally gets around to signalling that they are going to be tapering their asset purchases. And again, we had a little surprise from Bank of England last week. So, you know, when other central banks start to move in the direction of the Fed, then I think maybe that has bigger effect than just the Fed raising rates as we knew they were.
And staying on the central banks and going back to Bank of England and others, what were your thoughts on that?
Yeah, the Bank of England was the big surprise because there were 3 dissenters, obviously, and so that's the closest they've been to raising rates in quite a long time in England, in the UK. So the pound jumped on that data, and obviously that comes not long after the shock election result where the pound sold off. So it's starting to look like maybe that drop in the pound after the election maybe was a dip buying opportunity. We're not quite there yet. But it was hawkish from the Bank of England. They are signalling that inflation is going to be over 3% in the not too distant future over their sort of 2-year horizon, and they're saying labour market conditions are pretty tight, and so that means they've got less tolerance for this high inflation. Like in the past, inflation got to about 5%, they just still kept interest rates low. It seems like that wouldn't be the case this time, and the policymakers are edging their way, despite the political uncertainty, towards more likely a rate hike than some had been even forecasting a rate cut. So part of why the pound jumped so much is this is actually, obviously still 5 people voted to keep it on hold, only 3 for a hike, but it's just quite a dramatic shift from some even thinking they were going to cut rates next.
Yeah. And the other thing I wanted to ask you was about that big jump in the loonie, US dollar, CAD, Canadian dollar. Which was down maybe 300 points in 3 days or something.
Yeah, yeah. I mean, that was a pretty big move for the loonie, which has been a bit more range bound recently. And so that was basically the Bank of Canada, again, shifting gears. So it was a bit of a general theme last week, actually, that central banks shifting more to the hawkish side, which again, all collectively, is probably a negative for the stock market. We're not there yet. We haven't really seen it. The FTSE 100 looked very soft after the Bank of England move caused that jump in the pound, but not so much Canadian stock markets. But specifically on that, they basically just made a speech in Canada saying that actually probably the next move is not lowered interest rates. Actually, the Canadian economy has withstood the drop in the oil price pretty well, and they're not so worried about their sort of crash in house prices, and so actually there's room to raise rates. So that's again quite a big surprise, big change, hence the reaction. But obviously, when you're playing that Canadian dollar, I don't know if necessarily dollar CAD, even though it had the massive moves, is necessarily the best place, because again, you've got that kind of hawkishness on the dollar side as well. So maybe some of the crosses against the CAD might be a better way.
I see. Data-wise this week, what do you see as the key drivers?
Pretty slow on the data front. I wouldn't even say data itself is the big one, because last week we had a lot of economic data from the UK and from the US. We had a lot of central banks. I think this week, probably people will return to, when you think about the stock market, talking about the trajectory for earnings, and also maybe we've had a nice rest from talking about Donald Trump, but maybe that becomes a focus again, because the pressure it's still on to get this tax and spending reform through. People want to see some progress, not just chatter about it. So maybe a refocus on the politics. Obviously, this side of the pond, we're waiting for perhaps the Queen's speech, and just to see where the Conservatives stand and whether Theresa May is even still Prime Minister. Yeah.
Before we wrap it up, Brent crude took out that trend line that you mentioned last week, and also gold is holding it under 1,300.
Yeah, so that Fed meeting certainly was the undoing of gold. So the technicals in gold worked out quite well, because we had that drop, we bounced up to that formerly broken trend line and fell back again within the same day. So it was quite a dramatic, you can't really call it, it wasn't really at the end of the trend, but it was the kind of candle that looks like a sort of evening star, depending on the next day. So pretty bearish turn of events in gold, and I think probably we're heading lower there's a bottom trend line shot on the screen now. I think we're probably heading towards that, which would be sub 1250. And in oil, yeah, I mean, the market just looks really soft, especially considering OPEC obviously just made their move not so long ago to continue the output cuts. So I think while US production, there's chances we head into driving season that there's more demand in the US, so maybe that actually draws down the inventories a bit more. But I still think there's a general sense that production's on the up in the US, and so that's just going to continue weighing on oil. And I think if we don't hold up, if we don't hold these local lows, there's a chance that we just really tail off in oil. And I've talked about 40 before, but maybe we start talking about 30, and the market just falls off a cliff again.
Right. Well, thank you, Jasper, and thank you for watching. Don't forget to follow us on social media, where you can catch these videos and more as they are released. Thank you so much, and best of luck trading.